This is Tunde Thompson. This is one of the examples of liquidity draw. And this one is previous day high liquidity draw and previous day high liquidity draw. So if you don't know what a previous day high liquidity draw is, let me just explain it in a simple diagram. Let's say the overall market trend is actually bearish. Let's say we have something like this. And on Monday, we should now create an high here. Then a lot can now happen inside this place. Now the overall market trend is bearish. So this high being created signifies the highest high that was created on Monday. But because the overall market trend is bearish and we actually need liquidity to move, the market can take out the previous day high and continue selling. So all the time when you look at the overall market trend, yes, it can be bearish, but it still needs to draw liquidity. It still needs to take out liquidity for it to move. Okay, so let's go into a live example, and I'll be also using this to explain the confusion between change in session, when to trade instantly when the session enters, and when to wait for confirmation. Okay, so on the daily time frame, you can see that the overall market trend is bearish on the daily time frame. Now, marking out a point of interest now. Marking out a point of it. Let me take this off. All right, so marking out a point of interest now. Inside the 1 hour time frame, I can see this fair value gap here. This 1 hour fair value gap, which the markets can actually use to sell. So I like to label my charts 1 hour fair value gap. After having the 1 hour fair value gap, what can I see again? For me to be able to see anything, or depending on who you are, maybe I just need to go into a lower time frame. And right here, we can see that liquidity is building here. Liquidity is being built in all this zone here. There is no clear high. Always watch out for all these zones like this. They might not be so clean. They might not be giving you that equal high, but trust me, you will have something like this. And what happened shortly, we can see that another one is being added. So I can just stretch it out to something like this. So you can claim that yes, this one took it out, but if it actually wants to take it out, you want to see and you want to see it take it out fully. See, this is too shallow for us to call it a break in market structure, to call it a liquidity sweep rather. And if at all, okay, so let's just continue with the whole thing. So looking right here, this is New York, and let's say we want to trade on Wednesday. We didn't see all these moves in the market. We didn't see all the Tuesday move in the market. All right, so back to the whole narrative. Tokyo created an high. Yeah, look at this high. This is Tokyo forced itself in and created the Tuesday's high right at this place. And what happened? Creating the high, it took out towards the previous day high, which is the Monday's high. So we can clearly label this as previous day high. So one thing you want to know when a market is bearish and is taking out highs, especially major high like a previous day high, is that you want to notice that there's going to be momentum. It will just take it out, and you want to have like a momentum. What is the narrative? Market trend is bearish. We have a lot of liquidity resting here. Yes, some of you might think, okay, we took it out here with this one. But one thing I want you to know is that after taking it out, yes, it broke down. But what you want to see instantly is a break in market structure, a sweep of this low, a market structure shift. But it didn't come with a market structure shift. So these are like some traps you should run away from when you are trading. It took us inside the previous day high. After taking us inside the previous day high, you might not be available during the Tokyo session at all. Okay, so let's say you want to trade the London session. We are a type of trader that trades London session now. All right, fast forward to the London Open. We can clearly see that after taking out the previous day high, which is Monday, taken out on Tuesday took it out, which was created by the Tokyo session. We are meant to have an aggressive breakdown, but we can't have an aggressive breakdown because there is a London Open. London just opened. So if you're a type of trader that you are confused that even after Tokyo has swept liquidity, you don't know where you want to enter, or you are still expecting another sweep in liquidity, you don't have to wait for another sweep in liquidity. You can continue your trade from there. And how will you continue, and where do you think you can continue from? This right here is a breaker. This is a breaker right here. It's a breaker block. And after having the breaker, you will want to see a type of rejection of this breaker. You want to see like it's rejecting quickly off the block. So we don't really need it to take out the Tokyo high anymore. Yeah, some of you might be thinking that after London open, where do you think you can get more confirmation for this trade? If you go into a lower time frame like 5 minutes, you can see that liquidity was actually swept here. Look at this place. Liquidity was swept at this high by London Open. London Open by 2 o'clock. Okay. London swept this liquidity that we have here. And after, you want to see like an aggressive breakdown. All what is happening on the breaker. Is happening on the breaker. So liquidity being swept now, it should now be followed with an aggressive push down. And again, we have, if you go on the 5 minutes or 15 minutes time frame, you will see that we have this free fair value gap telling us that there is a narrative that it wants to aggressively break down. So there is no need for London to go and take out any previous day high or any session high anymore. So going on the 5 minutes time frame, let's just play this out and let's see the way it works. So you can clearly see, you can see this. Okay, you will always have this back and forth action when a new session wants to open. So the one thing you want to look out for is firstly, after taking out liquidity, followed by a break in market structure, an aggressive breakdown, then this is not a breaker. Note, this is not a breaker. Okay, so we have a fair value gap here, an aggressive push down, a fair value gap. So where should your entry be? Your entry will be here. Your entry will be here. This is the fair value gap. Your stop can be here after sweeping liquidity. Where should your target be? Your target can be the previous, sorry, this is the wrong sell model. Okay, see this. Your stop can be above this place. Your take profits can be the previous day low. This is the previous day low created because we are in an extremely bullish market, an extremely bearish market rather. So since your stop is here and you have this fair value gap, there is actually nothing stopping you from entering this type of market now. Okay, so let me just create a sell market at the current market price. Okay, so we can just play this out and see what the market can actually do. Okay, so you can see after entering this very, very aggressive. So some of you will be like, why is it that anytime you enter the market, anytime you open a London trade, the London trade has actually moved on? You fail to check the narrative of the previous session. Look at Tokyo. Tokyo has taken out the previous day high. So taking out previous day high, respecting the breaker, London can come in and sweep a little bit of liquidity. Then you don't have to wait for London to do any major damage than what it has done. Okay, so you might not actually wait for a full TP. Where can your take profits be? Your partial be? Your partial can be here. Though I think this is too short for you to have a partial. You can take partial here and your take profit here. So this market has not actually gotten to the full target, but trust me, it's going to get to the full target. So if you like this video, don't forget to like, and if you don't understand anything, you can drop your comments in the comment section, and don't forget to follow my account on all social media. You're welcome.